Coming up on the SBS On the Money podcast, a US court blocks Donald Trump's reciprocal tariffs, earnings surge at AI company Nvidia, and we take a closer look at what's actually increasing that demand in AI. That's next. Hi everyone, it is Thursday, the 29th of May 2025. It's a day where the Australian share market rose, but only just by 0.15%. That's despite strong US futures following a 69% rise in quarterly earnings at tech giant Nvidia, and after a US court blocked Donald Trump's reciprocal tariffs. To find out why and why our share market has underperformed that of the US so far in futures trading, I spoke with Todd Hoare, the Chief Investment Officer at LGT Crestone. So Todd, a US court has ruled Trump's use of emergency powers to implement reciprocal tariffs as unlawful. Should we have seen this coming, and should the market have seen it coming?
Well, Ricardo, I think no one had actually heard of the International Emergency Economic Powers Act of 1977 until today. So I'm not necessarily convinced we should have seen it. I think the implications are quite important. I think one of the main points is that we've not historically seen a ruling like this where we've wound back in its entirety a president's signature policy. And I think that speaks volumes for the importance of today's decision.
What do you think it means for investor confidence, though? Does it really help with uncertainties? Because if anything, does it add to these uncertainties? Because Trump could be appealing, or he's not, he is appealing it.
Yeah, well, I think certainly he will appeal. And so to some extent, the fact that in the best situation, the Supreme Court won't make a decision for probably 12 months. At the lengthy end, we've probably got till mid to late 2026 before the Supreme Court could actually rule on this, which gets you into the midterms and some complications associated with that. So even under a best case situation, we've still got significant uncertainty as to how this will play out. I think importantly, there are a host of other uncertainties that relate to this. If you are negotiating with Trump on tariffs, you have now no incentive to negotiate at all. If these decisions ultimately get overruled in the Supreme Court and a country potentially has not negotiated in good faith with President Trump, how does his reaction function deal with that? Does it make it worse for those countries? So there's a lot of game theory that will actually play out of all of this. And I think potentially the big thing that markets will need to grapple with is this big, beautiful bill that was recently passed. Obviously, a big component of that was these tariffs and their revenue-raising impact to actually control that deficit. So if we no longer have that revenue component associated with that big, beautiful tax bill, that big, beautiful bill rather, what does that mean for bond yields and the federal deficit? So yes, there is still likely to be considerable uncertainty.
How would you describe the way the markets have been reacting so far to this? Because we're seeing US futures rising, but here locally, the Australian share market hasn't done much. Is it a fact of they're looking through what you've just described and that confusion, or are Aussie investors anyway kind of waiting to see how the US will react? Because this decision came after the markets closed in the US.
Yeah, I think we are seeing a risk-on mentality. So you've seen it with US futures, as you pointed out. You've also seen it with the US dollar. So the US dollar has strengthened against those safe haven currencies like the franc and the Japanese yen. I think specifically to Australia, one of the main reasons that we are potentially acting as a bit of a laggard is that we've proven throughout this whole post-Liberation Day trade, we've proven to be a very, very defensive market. We've actually performed quite well. And so when we do get risk on like this, I think it probably makes sense for us to lag a little bit compared to what we may have otherwise seen.
And finally, before this actually happened, the president was asked overnight to respond to the idea that the markets are rising on what's being called the taco trade. Trump always chickens out, referencing his negotiations with China and the EU, right? Is that a thing? And what will this latest development do to that taco trade?
I'm not sure he will appreciate that moniker at all, but I think there's probably a subtle truth to that acronym, but it's more around the fact that there are guardrails in place. And I think the events of this morning actually prove that we still have those guardrails. So we've seen Trump backtrack when the equity market and the bond market reacted negatively, and he started to negotiate with other countries. So that was the first guardrail. I think the fact that the courts today have overruled him will instill a sense of confidence in the institution and the judicial process. So there's another guardrail. I think the fact that he also, for want of a better term, bashed the Federal Reserve, bashed Powell only 3 to 4 weeks ago, and yet here we are with that institution intact. I think the markets are looking at these guardrails and saying we can now put Trump into a particular lane. He can be volatile within the parameters of that lane, but the institutions, the Federal Reserve, the bond market, the equity market, the judicial system will not allow him to get outside of that lane. And that, I think, for markets in particular, that will give them confidence because they can price those guardrails. When you are moving in and outside of those guardrails, it becomes very difficult to price that risk. Now that we can price that, I think markets will move forward with a sense of greater stability than what they otherwise had.
And finally, and just wrapping all this up, I know there's lots of other influences impacting the way people invest, like yourself. How do you navigate this uncertain environment as an investor?
I think one of the things that we are very, very conscious of at LGT Crestone is that we knew and we always expect that this was going to be a volatile period. So having a disciplined investment approach in place beforehand doesn't necessarily mean you predict any of these things, but you can be reactionary probably a little bit quicker than what we otherwise would be. And I think our overarching philosophy is just having a constraints-based approach to investing, i.e., let's not worry about what is said by politicians, by regulators, or the like. Let's worry about what can actually get done within the parameters of global trade, markets like the bond market, etc. And if we operate with those parameters in mind, we actually get a greater sense of what can occur, not necessarily what we suspect might occur, and we're not jumping at shadows. So I think a constraints-based approach is probably, for this day and age, perhaps the only real way to invest.
That is Todd Hoare there from LGT Crestone.
Now, Market Day on the SBS On the Money podcast.
So to go into more detail about the market's rise of 0.15%, underperforming US futures today, that's on the S&P ASX 200, and to break down Nvidia's spectacular result and to take a closer look at where AI is going, I spoke with Armina Rosenberg, a portfolio manager at Minatour Capital. Armina, it would appear that the local market hasn't necessarily reacted too optimistically to a US court reversal of Donald Trump's reciprocal tariffs. Why do you think that is? Or is it a case of investors here waiting for the US to open because futures have really rallied?
Yeah, I mean, I think firstly there is that time zone lag, as you referred to, and maybe the Aussie market wants confirmation from the US market. And if that's the case, we can potentially expect more decisive price action once Wall Street opens and digest that news, as Australia often takes its cues from US equity markets on these things. But I think also there's the court reversal, while positive for global trade sentiment, it introduces legal and political uncertainty, and there's ambiguity about how the administration is going to respond. I mean, obviously, they've already come out and said it's not up to unelected judges to decide what is a national emergency. And so I think because of that ambiguity about the response and potential appeals and the practical timelines, investors might be a bit cautious trying to figure out how that situation evolves.
Another key piece of corporate news coming out of the US implicating markets is those that result from AI chip maker Nvidia. Nvidia is the second largest listed company in the world. Overall revenue up 69% in the quarter. And it's a big number because I think it's around $44 billion US dollars just in 3 months, right? Driven by its data center business. Run us through the results. Why are they important? What does it say about tech and AI? And what does it mean for investors? Because its CEO also said some pretty peculiar comments about the implications for China in all of this.
Yeah, I think Nvidia was a good result, as you said, so growing strongly. Data center growth was 73%, and that led to that overall revenue growth of 69% and net income growth of 31%. I think, as you said, there's two key aspects at play here. There's China and then fundamental AI growth. So on China, firstly, if it wasn't for China, that net income growth would have been 50%, not 30%. And Trump's policies meant they could no longer ship H20 chips to China. So they took a $4.5 billion inventory hit. And revenue guidance was actually slightly weak, and that was because that China issue is still having an impact. But I think that it's been largely priced into where people are kind of looking at the share price of Nvidia right now. I think the more important thing is the result demonstrated this huge underlying demand for AI. So the company talked on the call about a sharp jump in inference demand, and we feel that people are really underestimating how much token use is due to things like reasoning models and the rise of agentic AI workflows. I think on the call, the CFO said that Microsoft used 100 trillion tokens in Q1. Like I can't even grasp what 100 trillion as a number is, but it was a 5 times increase year on year. And reasoning requires hundreds of thousands of times more tokens per task than what you had in the previous one-shot inference. So when you were asking, ChatGPT something, a sort of simple request and answering, now if you kind of ask it to do reasoning first, that requires hundreds of thousands of times more tokens than it used to. And so we've seen this significant increase in AI use cases over the last 3 to 6 months, and that's a result of these models. I think the key issue for Nvidia is whether the recent growth is a bubble that will then fade. Our view is having seen more of these real world use cases develop, and also, I guess, being a real world use case ourselves, we're still in the very early innings of AI adoption.
So how has all of this flowed through to the way the Australian share market's performing today?
Yeah, I mean, I think you said before it has been sort of muted. I think you're seeing it drive a sort of risk on tone in the ASX generally, and tech and data stocks are kind of leading gains today. The flow through does seem strongest in sectors with direct or thematic exposure to AI and digital infrastructure. You're seeing, I think, NextDC's actually had a pretty good rise today, and that just reinforces that sort of AI and AI infrastructure investment cycle.
Now, the economic environment is constantly changing, as we saw today when we talked tariffs, right? So what are you telling your clients, and where are the opportunities for investors, do you think?
Yeah, it's been a very tricky market to invest in over the last couple of months, just given all the geopolitical uncertainty and so many things at play. We're still in wait and see mode on tariffs, but what we've pretty much seen since Trump's inauguration and JD Vance's address at the Munich Security Conference is, global policy uncertainty and volatility. It seems par for the course right now. And on the other hand, and I guess we've kind of been speaking about this, the AI thematic continues hotter than ever, and we've seen the big names release crazier and crazier innovations. So I'm not sure if you saw it, but in the last week, Google released Veo 3, which was a substantial upgrade in AI video generation, basically generating synchronized audio, including dialogue, sound effects, music, along high quality visuals. So it's actually becoming hard to pass like what's real and what's AI, which is a bit scary. But this is kind of along the advent of those reasoning models I talked about earlier, and shows how powerful these LLMs can be. Like, it's just kind of taking over in terms of the use cases that we're seeing. So those two themes are actually dominating our portfolio. We have a substantial allocation to European defense names and a substantial portion to AI related names. And they've both been doing really well, but kind of been doing well in different ways and in an uncorrelated fashion. So it's been working really well to have those two counterpoints in our portfolio. We think the structural shift in allocation of GDP towards defense spending in Europe is still not being fully priced in. And equally, we have only just scratched the surface of AI penetration. So, I think I mentioned to you before, we use AI. My firm has built our own proprietary software to use AI to discover sort of idiosyncratic opportunities within the market. So we've got those two big themes that I just talked about. And then the AI for our fund is actually discovering a whole bunch of like idiosyncratic opportunities. So we also have a big position in like a Japanese talent agency for VTubers, a Polish game developer, and an Aussie recycled titanium play. And so I think that's a good way of thinking about how to invest as well, is look for opportunities that aren't being like too, I guess, bandied around by what's happening in sort of global macro markets at the moment.
That is Armina Rosenberg from Minatour Capital.
This SBS On the Money stream is provided for informational purposes only. The content in this stream should not be understood as constituting advice or a recommendation. It is not personal advice and it does not consider your personal circumstances or objectives. You should contact a licensed professional before making any financial decision.